Large banks in Kenya have recorded impressive performance in their 2014 full-year results. Setting the trend was KCB Group, which recorded an 18% rise in its pre-tax profits, followed by Barclays Bank, which saw a 10% increase, and Equity Group, which also recorded an 18% rise for the same period, a strong indication of an enabling economic environment.
If we look at Kenya, Kenya stands out as one of the most diversified economies in Africa. If you now add oil, the impactors of oil and gas, to such an economy, would significantly see a powerhouse in the region, big in size and able to quickly transform itself and consolidate the growth opportunities. So some optimists believe that with oil, Kenya can easily achieve its Vision 2030 target of 10% GDP growth rate within the next 3 to 4 years.
More so, increased lending, rising net interest income, and lowering operating expenses emerged as a winning formula. But one key factor stood out that could further enhance the growth of the banks in the long term.
We also are very cognizant that we have to use technology to give us competitive advantage. We are investing in digital platforms, we are investing in payment solutions, and we have some very exciting, innovative work underway as we speak that we will be announcing and releasing new products that haven't really existed, we believe, in the shape and form we're working on them later during this year. And this will allow us to be able to tap into new segments that possibly we have not seen the full benefit of in the past.
2014, we've been confronted by the same structure where we had to confront technology refresh, completely redesigning, looking at the structure, the legal structure, the organizational structure, the human skills, and the brand positioning. And I would like really to say we're very confident that we'll be able to fully exploit the benefits of an enabling economic environment because we have sunk the cost over the last 1 year, amounting to about 800 million, a one-off cost that helped to reposition ourselves. And we are now very confident that the repositioned stage where we are, where technology becomes an enabler, where there is convergence in financial products and services.
Further stressing the benefits of technology is the gains made by the revolutionary mobile money platform M-Pesa, which has transformed the financial landscape in Kenya.
Banks are now connected to the mobile platforms to manage transactions. So sometimes we see them as independent, but these cards, you load them from your bank using a mobile platform. So a number of our transactions also, we're generating more mobile transactions than ever of our history. And if you look at, for instance, if I speak specifically about M-Pesa, close to 35 banks are already connected to the platform from their banking systems. So I think you need to start correlation. It's a partnership. Sometimes it's seen as one against the other, which is not how we see it from the industry.
Some of the banks are also looking to tap into growth areas such as the SME sector, which has seen robust growth over the years.
We felt that there was an opportunity to support SME customers, and they were falling between the cracks in our system. We had a retail business and we had a corporate business, but we didn't have a specific business that focused and understood the needs of our customers within the SME segment. So we successfully launched this. We see this as a significant opportunity going forward that we intend on trying to support and grow in the future.
And as the banks look towards a vibrant year ahead, diversification into new revenue streams remains top priority.
Energy, so you're looking at renewable energy, geothermal, and wind project that we are actually working ourselves on today. And those are their big investment. And then at the region, we definitely have similar kind of projects of energy in Uganda, in Rwanda. Those are big projects we see. So infrastructure, energy and infrastructure, meaning roads, that's a big part.
We have 400 460 of our university students who did medicine. And we then looked at it as entrepreneurs and said, why don't we help these, of these 420, we take 300 to the private sector, create a franchise for them called Equity Afia. We fund them, each of them 33 million shillings, to set a clinic in their district. And then the bank rolls out an Equity Afia medical insurance, which is already rolled out with 1.8 million. So they have a captive audience to treat. And then the members can also be treated in an environment that they are sure of the quality of service, the quality of drugs they will be given, but more importantly, they will be treated with love and passion.